Trent Brandon Rogers, Bradshaw Financial Planning, and thank you for joining us for Mind Your Money. Today is May 6, 2020. We're joining you around 10 a.m. Wanted to bring you a market update on what we're seeing so far. Brandon, we're going to take a look at a couple charts today, but a lot of things have happened in the last week. Go ahead and jump in and talk about the first thing.
Yeah, so the first thing we'll look at is basically the Berkshire Hathaway, Warren Buffett's company, had their annual meeting, and everybody pays really close attention to this because obviously Warren Buffett has a track record of really good bets on the market and the investment he makes. So one of the key takeaways from here is you'll see some of these headlines is that Buffett's not really buying anything right now. He does have a lot of cash on the sidelines, ready to do something. He just doesn't see anything attractive. This is a big difference compared to 2008 when he was actually putting money to work. So he's not, so he's just kind of hanging out from there. He also sold off all of his airline stocks, thinks that's really going to take a long time to kind of get back to normal. But at the end of the day, the main takeaway here is do not bet against America, as will always prevail. So that was very positive news coming out of that. But again, we just pay attention to him and really want to follow his lead there. Another thing that we'll look at that happened this week that really kind of bolstered the economy and the market again is the Fed stepped in and said they're planning to do another $3 trillion this quarter. So again, Fed trying to step in to do this. Now we'll see what maybe this happens with how this affects a bear market, and we'll take a look at that on the next chart. But the Fed's definitely kicking some money in right now and helping things out. So yeah, let's look at the bear market trends of three phases of the bear market trend. Talk about that.
Yeah, the bear markets that we've seen in the past, usually what we're recognizing is there's three phases to those bear markets. Well, the first phase is where you get the capitulation, the panic. You'll see the immediate sell-off of the market. It seems like it's doom and gloom. And then all of a sudden we'll transition over into phase two. How large that rebound in phase two is going to be, nobody really knows. But the fact of it is, it's really fueled most of the time by Fed action. Printing money and bringing liquidity into the market. And I don't think that's changed this time. It's the same thing. And like you mentioned, $3 trillion additional coming into the market. It's hard to fathom how large of a number that is. But eventually you'll transition over into phase three. And that's where the real economic data hits. And the market finally realizes, hey, this may not be as easy of a rebound as we thought it would be.
All right. Yeah. So when we take a look at the next slide here, I mean, basically we're looking at earnings and sales growth from the earnings from this past quarter. So as you can see here, a lot of the sectors are not doing too terribly. Obviously financials and materials kind of got beat up, obviously, and energy. Everybody heard about the oil side of the equation. But when we're looking at it, we might potentially look at adding healthcare into it. 6% growth actually looks pretty solid.
It's one of the bright spots.
Yeah.
And when you look at the overall, earnings from a whole of the S&P 500 with 340 of the 498 reporting, it's down 9.2% year over year for the first quarter. Yeah. So we expect it to deteriorate more. It could be 20 to 30% in the second quarter. So it's definitely something we got to keep an eye on. Flows into some additional data that we got this morning, which is the ADP total non-farm private employment numbers. Negative 20.2 million jobs lost during the month of April. It's unprecedented. Yeah. But that again is some of the negative data that we're seeing on the underlying economy that we've got to pay attention to and be prepared for. And I think the portfolios we've designed to have some defense in there. We're not going to sit on the sidelines. We're going to participate a little bit, but we are going to play defense with these underlying fundamentals. Brandon, talk a little bit about that.
Yeah, so within the portfolios, we do have, like we said, there's defensive sectors still in equities, but trying to have some defense put in there as far as gold, consumer staples, things of that nature. Again, we may look at adding healthcare in the coming days or weeks, but we'll certainly keep everybody posted. This is Brandon Rogers and Trent Bradshaw with Mind Your Money. Make sure you join us on social media and Facebook and the YouTube videos for sure, so we can give you these market updates. But let us know if you have any questions, and thank you for joining us.